Hello and welcome to KYC. I am your host and host Sharad Dubey, and today we are getting a very interesting company, but I won't give you the name so easily. There will be some hints to it. Okay, let's see the first hint what it is, and it's getting easier. First one is it's an auto ancillary company, and I've picked up this company because there's a lot of things happening in the export and the domestic market. I'll give you that reason also. The second hint is it's a part of a 8-decade-old Lumax group. Only 2 companies exist. It becomes very easy for you to guess. And interestingly, another hint I would like to give you. That is, the stock has given 1200% return in the last 5 years. It's already a multi-bagger. Is there a further leg to it? That is something we'll be looking out for. So these are 3 hints. You know there are 2 options. There are only 2 Lumax group which is listed in the Indian space. And for you to guess it right, the stock's name is Lumax Auto. That's what I'm going to talk about today. But the reason is, why are we calling this company? Why is it so important? Q3 numbers are definitely important. That's the first thing I would be asking this company about, what led to a very strong growth coming in. But apart from that, we'll be going much more into the details. Why? Because the industry is seeing a big inflection point. The current commentary on the demand post the GST rate cuts, all the auto segment has seen a good up move. And this company is an auto ancillary. That means it's a shovel or it's an ancillary theme. And that is where my interest lies in this counter, in this industry. The integration of subsidiaries, any value unlocking happening here? That's a key query to be asked. Also, apart from that, we will be wondering what are the export opportunities which come up post the FTAs which are there coming in. European Union was done. We know the clarity coming in with the USA also. Is there a global supply chain change happening? And if that happens, will it benefit the company or not? And of course, the update on the long-term guidance. The company is sharing its 5-year guidance, which we will be looking out for. So these are the key reasons which we will be talking about the company. And to give us entire perspective would be Anmol Jain. He's the managing director at Lumax Auto, and Anmol will be giving us most of our queries. But before that, I'd like to give you more details about the company. You must be wondering, okay, it's an auto ancillary company, but Sharad, what else is there? So first of all, it's an integrated auto component player. They are having some backward integration also, and they have been already old in the industry, almost 2 decades for this company, and overall Lumax Group is 8 decades old. They have started with the lighting segment for cars. That's pretty much important. And moving ahead, the manufacturing and supplier of automotive lamps, plastic modules, parts, and the frame chassis. These are the important components which they are focusing on. There is a 2-wheeler, 3-wheeler, 4-wheeler segment as well. I'll be giving you the client list also, how it's actually panning out. But look at the names. They're the biggest players in the industry. M&M, Bajaj Auto, aftermarket also, there is a big, market. And remember, this is a high margin market because replacement demand keeps on moving around. Tata Group is there, Maruti Suzuki is there. So they have got the best customers in town. And most of the auto stocks, OEM players have done well. So the second order effect comes into this kind of sector. The total order book, that stands at roughly 1450 odd crore rupees. But by when this order will be completed, that's very much important, and it will be done by FY29. But in that also there is a future and a clean mobility order book, and that is 40% of it is likely going ahead. This might even go past that 50 to 60% mark. That's what we'll be asking Anmol, by when will that happen? But why are the auto ancillaries companies in a sweet spot? To put that in perspective and why we are calling this company, this is one of the main 5 reasons why this space is very, very attractive. India's export outlook is very strong. We have seen that in the numbers in the 2-wheeler, 4-wheeler, big orders being announced. The major trade deals have been completed with European Union and US as well. That is why it makes auto ancillary space more attractive, a chance for a big re-rating, and the domestic demand across all the categories has been strong. That is what is aiding this entire industry and its constituent players, which Lumax Auto is also a part of. Apart from this, the strategic JVs and acquisitions, these announcements are also coming in, and already they are having a good exposure in the MNC space also. That means they can actually expand it more, especially in the European region as well. Important changes are happening in the supply chain. That, if that happens, if it is China +1, then the benefit comes in for the auto ancillary space as well. So these are the important industry trigger and what Lumax Auto is all about. But one thing is more important is the KYC rating. How do we judge a company in our show? And to make it a very balanced approach, we have financials. These are the main three things which company needs to be analyzed in KYC. Then comes the return ratios. What are the ROC, ROE numbers looking like? Apart from that, the institutional change of hands, if there is any, or promoter buying or selling, that comes under the shareholding segment. And interestingly, I'll explain you the street cred also, how much returns have been made if you have invested in this company. If you're a short-term trader, a medium-term investor or a long-term investor, all your queries will be answered in this data. Valuations, we'll compare them with a lot of MNCs and even Indian companies which are there in the auto ancillary space. And interestingly, their group companies also there in this list. Outlook, very much important for the company perspective and the industry perspective as well. So these are the 8 rating parameters where we'll judge Lumax Auto Tech. The first parameter, that's the income statement. And income statement, look at the growth coming in. And the last 3 years number, I have taken the revenue, EBITDA and PAT. All of them have been above the 34% mark. The revenue CAGR is the 3-year CAGR is up 34%, but 40% plus is something which I'm talking about, the EBITDA and PAT. Now you must be wondering, what are the Q3 numbers? Let's put the Q3 numbers also to give you the picture of why there is bullishness coming in the market. And when we are judging an auto ancillary company, remember year-on-year basis is something which we track. PAT number has gone up, it's up 93%. And overall, even the revenue and EBITDA number has gone through a good up move coming in. That means their valuations and the growth are supporting each other. And that is where alpha might be created more from current levels also. So net, Lumax Auto Tech, when it comes to the income statement, it's a strong thumbs up. The next one is the balance sheet. How does the balance sheet look? And largely, the borrowings have actually come off from FY23 to FY25. But when a company is expanding and a lot of important moves are happening, then largely it seems very decent. The debt levels are not to be concerned about. The equity is strong. And interestingly, the cash bank balance they have deployed, but they have kept it decent, around 75 to 80 odd crore rupees for FY24 to 25. So net, there is no concern in the balance sheet and it's decently managed. I saw the liquidity ratios also. To put that in perspective, it is a neutral rating when it comes to the balance sheet. So the income statement we spoke about the balance sheet, but cash flows are also very much important in any type of a business model. And let's see what has happened here. The cash flows have been going up and it's almost doubled in FY25. Remember, they're a grade A supplier, so the OEMs pay them in time. Net cash flows also has been decent. This is the number which we are looking at. So net, cash flows is also a strong thumbs up when it comes to Lumax Auto Tech. Let's talk about the return on ratios, how things have actually panned out. And when you're investing in an auto ancillary company, at least 14 to 16% returns you should expect. And largely the company has increased, from FY21 to coming up that higher teens, 17 odd percent, but slight dip coming, it's around 16 odd percent. So the company has actually met the expectations. But going ahead, if they go into the future mobility segment and large orders come in, big inflection point comes in the industry, maybe if this touches around 18 to 20 odd percent, then there'll be a new phase of growth coming in. The long-term strategy also, they're expecting around 20% growth as well. So net, it's a neutral rating when it comes to the return ratios. So we spoke a lot about numbers, but the shareholding is also very important. This is not the financial numbers, but it shows you what are the institutions buying or selling. Promoters has been stable, so I won't talk about that. FIs, 9% in March 24, and they have actually increased it back from 5% in March, in December by 8%. That was pretty much interesting. DIs, they have also increased their stake. Look at that. It was 14% in March 24. That has gone up to 17%. A slight decrease in the retail holdings. But nevertheless, the institutions are still giving thumbs up to this counter. And that is why I have also given a strong positive rating when it comes to the shareholding pattern. But after shareholding pattern is street cred. Kitna paisa bana? How much money, if you have invested in the company over a period of time, how much did you make it back? So last 6 months, it's a 70% gain. So that's a very strong up move coming already in the counter. This year to date, it's just been 1.5 months. 10% is pretty strong. It's a good up move coming in. Remember, Q3 numbers impact is also there, and which was already a good set of numbers. So that reaction is also getting factored in the stocks. Last 1 year stock is up 214%, and it has already been a multi-bagger, almost 1200% in the last 5 years. So India's auto ancillary space, a lot of multi-baggers have come in, and they are sustaining because a new inflection point is coming up and the global trade setup is changing. So India is seeing a great setup in the auto industry. So auto ancillary is also following it up. So a strong thumbs up when it comes to the street cred. Let's talk about the valuations, how the valuations are panning out. And remember, Uno Minda Corp is then still cheaper on the 12-month forward PE side, and this is coming post the earnings. It is still cheaper compared to a lot of names here. That means you can see this stock is moving up, but the earnings growth is also supporting it. And just compare that with their own parent company, you could say, or a group company, that's 29 times, slightly expensive to that. But nevertheless, it's different, both of these arms. Gabriel India, it is slightly cheaper than that also. That means there is a case for re-rating in the entire sector, and most of these counters are grade A suppliers to the OEMs. That is why my conviction is there in this valuation comfort also coming right now for Lumax Auto. So that's why I'll give a strong thumbs up when it comes to the valuations also. Also, let's talk about the outlook, how things are panning out. These are company specific because I have given you the entire picture earlier for the industry. 20% they have been talking about, and this 20% is for 4 or 5 important criteria, be it the revenue CAGR, be it the margins, be it the ROC. But remember, this is still FY31, next 5 years. Higher content per vehicle and JV wallet share, that is where the margins go up, and management has been bullish on this segment. We will ask Anmol, actually, what are these announcements or the sectors which would be coming in? It's a bit technical, but we'll try to simplify it for you. And they'll be foraying into the body control modules. What are these actually? What's the benefit coming like? And how big is the market size, target addressable market? That's all questions will be asked. Pivoting to demand-led growth, what does that mean? Is this a recurring demand, or is this a long gestation demand? That's a concern in the market. We'll address that. And the connected vehicles, this is the future I'm talking about. Already 40% of the order book is in the clean and future mobility. So will that go up to that 50-60% mark? That is what we'll be looking out for. So overall, outlook also seems strong, and I've added both the industry and the company outlook as well. And this is a long-term play. So it's a strong thumbs up when it comes to the Lumax Auto Tech. Also, let's talk about the overall ratings, how things have actually panned out. We have given financial parameters, the non-financial parameters, and the future outlook as well. And largely, this is one of the best companies I actually have featured in KYC. I could say income statement has been strong, cash flow has been strong, neutral when it comes to the balance sheet and the return ratio. But even after stock going up, there is a valuation comfort which is there in Lumax Auto Tech, and it rarely happens, but definitely this has happened, and that's why I've got this company to understand more what lies ahead for the industry. Shareholding, the institutions are lapping up more, and the outlook is also strong. So the total KYC rating for Lumax Auto Tech is 7 out of 8. It's one of the highest numbers I have given because of the industry, tailwinds which are coming in, and the company itself. Both of them are in a sweet spot. Also, Anmol Jain, the MD of Lumax Auto Tech, will be talking to us in just a while. But interestingly, he has over 26 years of leadership in the company. He joined the company in the year 2000. He's the executive council member of ACME. That's an important body for auto ancillary space, and also the education coming in from the Michigan State University. And joining us to give us the entire view is Anmol Jain. Good afternoon, Anmol. Always a pleasure to speak with you. Q3 numbers, let's start with, and then we'll go into the industry-specific questions. What led to this strong rate of growth, in this third quarter itself, and can we get that mirror impact in the fourth quarter?
Good morning, Sharad. Thank you for having me. Number one, I think Q3 performance is just, again, a consistent quarterly performance by the company. It is backed by multiple things. For the quarter, we grew 40%. Part of it is, of course, because of the GST rationalization. We did see a huge uptick in demand across different segments. But also, compared to last year, there was an inorganic move which the organization had taken in terms of getting green fuel energy as a part of its portfolio. So for the full quarter, we get that realized impact versus just about 1 month in the corresponding quarter last year. So there are multiple reasons. And again, as a part of our long-term strategy, we continue to move forward into more premium offerings, increasing the value content per vehicle. And again, it's a culmination of all those factors, which has resulted into the strong quarterly performance. And I think we are quite bullish to see that for the full year, we will continue to at least maintain a similar growth. Over the next 3 to 4 years, I think you've already mentioned, we continue to aspire to grow at 20% CAGR. And again, this year, as I mentioned, Q4 looks promising. We have, in fact, gone and revised the forecast to upwards from 25% earlier to 30% for the year.
All right, so there's already a guidance upgrade coming in, and the Q4 numbers largely will mirror the Q3 numbers as well. But your current commentary on this demand, post the GST rate cut. First, we'll talk about the domestic, and the other questions, Anmol, we'll get into the foreign aspect as well. Now, this demand, coming in from the OEM players, is it overwhelming right now also for the fourth quarter as well? As they have, some of them have even announced some price hikes. So how is that demand looking like?
I think quarter three was an exceptional quarter. Of all the Q3s, historically, this has been one of the strongest quarter three. Usually, typically, end of the calendar year, people defer a lot of the purchasing for a new model year. But Q3 was exceptional. And I think Q4, we continue to see these tailwinds. If you look at the retail inventory, most OEMs are running very thin on the retail pipeline or the final inventory across the ecosystem. So we are quite optimistic of having a similar great quarter four across different segments. And I would also tend to say that even in FY27, this growth momentum should continue.
Right. So there is a strong commentary for Q4 as well as FY27 for Lumax Auto Tech. But Anmol, the global situation has changed. Maybe some folks are stating that there might be a change in the supply chain system also, the way we have completed the FTIs. It's a big shout out to our Indian government, the way they have done the completion of the European Union FTA, and also things coming in favor for the US markets as well. The auto sector lobby is happy. The auto ancillary space is also, doing well. Anmol, I need your view on that as an industry spokesperson also. Now what happens to the Indian auto ancillary space?
I think Indian auto ancillary space is extremely well positioned. It was always very competitive. It always could go up and scale up significantly. With these FTAs, I think it's just going to propel this further. The whole EU FTA will not just, open a completely new market for auto ancillaries to export out to. Having said that, of course, there was a significant part which was already exported to the EU. But under the FTA, of course, the fine print will still have to be seen, but it poses a huge opportunity. And on the flip side, I think a lot of the imports may also become a lot more competitive. So it's a kind of tends to gain on both sides, the supply side as well as the buy side. And similarly on the UK as well. With the US, of course, we will still have to see the fine print, but there is a huge opportunity which opens up specifically in the other segments beyond passenger cars. It could be off-roaders, commercial vehicles. But again, Lumax Auto Tech, a company, is right now fully focused on capturing its domestic growth, expanding its wallet share, and as a part of its next 3 to 5 years. But again, we will look at options. How do we start to penetrate into the export markets as we go forward? But that's definitely not a immediate priority for the company.
And Anmol, what's the breakup like? Is it 100% domestic revenue coming in, or is that some kind of export revenue is also there? Because I want to get that number as well. I couldn't find it in the investor presentation.
So we do a lot of indirect exports. A lot of the parts which we supply to the OEMs do get fitted onto the vehicles, and the vehicles are actually exported out. So we actually count that as a domestic revenue. The only exports we do is pretty much in the aftermarket space, but it would be less than 3 to 4% of the total consolidated revenue today.
So that's a very interesting point, and some of my viewers were confused, especially the younger ones that had written to me about that. But the order book, that's around 1450 odd crore rupees. You're going to complete that by FY29. There's an interesting name which you had taken for this segment. It's called the Future and the Clean Mobility segment, and the market would be giving you a premium because of these important segments also. Now the revenue profile or the order book profile from this segment, how does it change in the next 3 to 5 years? Will it come up to that 60-70% mark when it comes to the future and the clean mobility? What's your view on it? What the company is doing right now?
So, Sharad, if you look at the order book today, 70% of this order book sits in three business verticals for us: advanced plastics, alternate fuels, and the mechatronics. All these three are one of the fastest growing for the company. And again, these three domains or these three business verticals are largely catering to a lot of the EV green energy platforms. And that's the reason from current level of about 14% of the consolidated revenues, which comes from future and clean mobility space, we are quite confident that this should be at about 20% plus, likely to even maybe go to 25 to 30% over the next few years. And yeah, I mean, 40% of the current order book sits there. But as we move forward, we are pretty confident that more than half of the order book will come from the future and clean mobility areas.
Right. So now from 40% futuristic medium-term guidance, I'm assuming Anmol is going to be around 50% going ahead as well. But just give me the timeline or the progresses for your integration of your subsidiaries, because when this integration happens, a lot of value unlocking also comes in and it's reflected in the share price as well. And a lot of viewers write to me that what are the process timelines and by when we can see that happening.
So I think the IAC merger, the Honorable NCLT has already, given a go-ahead for the first motion. I think we are hopeful that, soon in due course, we should complete that 100% integration to the parent company. And Green Fuel Energy, which is the second, inorganic move we took, I think the SPV has already been merged. And again, going forward, we'll see how do we unlock real value in Green Fuel Energy. We remain quite bullish about that subsidiary company from a current, annual revenue of about 350-400 crores. We are reasonably confident that we should be able to at least double or more than, double the revenue over the next 3 to 5 years. So again, an accelerated growth, but these are the two main ones. I think rest of the joint ventures and subsidiaries pretty much remain structurally on an as-is basis.
Interesting on that. Anmol, AI is also, becoming the talk of the town. The Indian AI Impact Summit has started, from January the 16th as well. But AI, connected vehicles, this also becomes a part of your profile. And of course, this is R&D stages, and it's a very smaller one right now. But what are the updates on that? If you could just give us a flavor of, connected cars, or which portion of this cycle you are a part of.
So Sharad, from a connected vehicles, we already have a business vertical of telematics. We are currently already, supplying to certain OEMs in terms of telematic TCU products. Going forward, I think we are very clear that we will be utilizing a lot of the software services across our product lines, trying to integrate all of them as a, rather than individual products, as a customized integrated solution for our OEM. And for that reason, we also started the technical center in Bangalore called Shift, which is largely a software-driven technical center. So going forward, I do see that technical center adding a lot more value in terms of the total positioning of the company. And apart from that, I think AI, we are already starting to evaluate how to use AI to make ourselves more competitive, more cost efficient across our not just supply chain, but also our production and manufacturing system.
And Anmol, CapEx plans, any numbers which has been earmarked for the next couple of years or maybe FY27?
So I think this year we should be close to 230 to 250 odd crores. But again, part of that, almost close to 50 crores of that 230 to 50 will go through actually strategic land acquisitions for future growth areas in certain particular territories where we see a lot of OEM expansion activities. Over the next 2 to 3 years, I think organically speaking, we will continue to be close to around a 200 crore annual capex. And again, inorganic opportunities is something which the company continues to evaluate very, very closely. As and when that happens, that will be over and above, of course, and will be dealt with separately.
Right. Thanks a lot, Anmol, for giving your time and giving the entire perspective on the company's growth outlook and the industry, and wish you all the best in the entire auto ancillary space as well. Well, that's the management for this company. Anmol was talking about it. I'll just revise the ratings, and most of the parameters the company has done well where we have judged the company, especially on the earnings front. That is where the street has given a strong thumbs up. Apart from that, even the institutional ownership has increased over the last 2 to 3 odd years. The valuations, despite a run-up, are still attractive, and most importantly, the outlook has been really strong. So overall, 7 out of 8 when it comes to Lumax Auto Tech. So that's all, folks. Thanks for tuning into KYC and important companies in the KYC segment. Whichever you require, do message us in social media so that we can get these companies and give you more clarity on both fundamental and the technical front. Thanks all, folks, and stay tuned to NDTV Profit.